Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, November 17, 2010. The broader U.S. stock averages are trading on a mixed note. On Tuesday, the Dow, Nasdaq, and S&P 500 tumbled by over 1.5%. The Dow fell below the 11,000 level, and the major stock averages saw its worst one-day loss since August. Now, concerns about an Ireland bailout as well as a possible rate hike out from China have been weighing on global market sentiment. Although Ireland has not made an official request for aid, talks do continue between the EU and Ireland. On Thursday, November 18th, the EU, ECB, and the IMF will be meeting to discuss aid for Irish banks. And in China, concerns about monetary policy tightening have been weighing on overall investor sentiment. Now, there are concerns about a potential rate hike and how it could impact growth. And taking a look at economic data releases that came out in the U.S. on Wednesday, CPI climbed by 0.2% in October, while core CPI rose by 0.3%. And housing starts for the month of October in the U.S. fell sharply lower than expected, down to its weakest in 18 months, sliding 11.7% to an annualized rate of 519,000. Meanwhile, housing permits climbed by 0.5%. Over in the foreign exchange market, the U.S. dollar traded lower against the majors of the euro, pound, yen, as well as the Australian dollar. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend opinion, we'll take a look at the individual IC FX option pairs, starting out with the AUX, that is the U.S. currency against the Australian dollar. Now, for that pair, the key short-term resistance stands at 107.25. The RSI is mixed with a bearish bias. The preference of trading central analysts for that pair is short positions below 107.25 with targets at 98.25 and 93.50 in extension. And for the BPX, the U.S. currency against the British pound, it is capped by a negative trend line. Now the pair is capped by this medium-term declining trend line, and the RSI is mixed to bearish. The preference of trading central analysts for the BPX is short positions below the pivot of 64 with targets at 61 and 60 in extension. For the CDD, the U.S. currency against the Canadian dollar, the downside does prevail. Now, the RSI is capped by a bearish trend line, and the preference of trading central analysts is short positions below 105 with targets at 99.50 and 98 in extension. Moving on to the EUI, which is the U.S. dollar against the euro, caution is advised. It is currently challenging its new resistance, and the RSI is mixed right now. Therefore, the preference of trading central analysts for the EUI is short positions below 75, with targets standing at 72.50 and 69.90 in extension. For the SFC, the U.S. dollar against the Swiss franc, it is under pressure. It is currently challenging its new resistance, and therefore the preference of trading central analysts is short positions below the pivot of 100, with targets standing at 94.25 and 92.30 in extension. Last but not least, for our last currency pair in this segment, we'll take a look at the YUK, the U.S. dollar against the Japanese yen. Now, that pair is under pressure and currently challenging its new resistance. The preference of trading central analysts for the YUK is short positions below 84.50 with targets at 80.40 and 79.30 in extension. Now, moving on to the weekly trend opinion segment. Last week, the U.S. dollar continued to approach key levels against the other major currencies. Now, the U.S. currency will closely be watched this week for any reversal signs. In terms of portfolio performance since its inception in August of 2007, it is higher by 1,943.68%. And since the beginning of this year, January 2010, it is higher by 663.58%. Now, we do have one trade alert for you right now, and it is to consider puts on the PZO. Now, that pair is currently on the downside and currently challenging its support or its previous low. Also, trading central analysts will be taking a close look at the BPX, the YUK, the EUI, and SFC. Looking ahead to next week, trading central analysts will be looking at the NZD, the AUX, and the CDD. Starting out with the NZD, it is posting a rebound and does remain capped by a medium-term declining trend line. And the AUX is shaping an inverted pennant and stands below its new strong resistance at 107.25. Last but not least, for the CDD, it has rebounded on its support at 99.50 and lacks upward momentum. Now, the RSI for the CDD does remain capped by a declining trend line. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.